So I'm just going to go through the slides. I'm a chartered accountant. I've been in practice for about 20 years, and I have a lot of clients who are self-employed or who run their own companies. So I should be able to answer most of the questions that you have. Okay, so we're going to start with an overview. What is self-employment? So the majority of people who work are employed. When you're employed, this means that your employer is responsible for deducting the tax and national insurance from your pay and paying it to HMRC, stands for Her Majesty's, or His Majesty now, Revenue and Customs. So HMRC are the regulatory body that deal with all the taxes in the UK. So that's covering people who are employed. However, if you're not employed and you're supplying a service or goods to a business, then you are in business yourself, self-employed. And when you're self-employed, it's your responsibility to deduct the taxes and the national insurance and pay those over to HMRC yourself. It is possible to be employed and self-employed at the same time. So you may have a part-time job where you're employed, but you may also run your own business the rest of the time. So it is possible for you to be both of those things at the same time. When you're self-employed, then you still will need to complete a tax return, and you will need to put the information from your employment and also from your self-employment onto the return. Which can be confusing. So what do you have to do if you're self-employed? You need to keep records. You need to keep records of your income and your costs. There aren't specific rules about how you need to do this. It could be very simple, like a spreadsheet or a notebook. But these days, there are a lot of online systems that really help you with keeping these records. And so we'll go through a couple of options that you can look at. But as I say, there isn't a rule. The requirement is to keep a record. So I really recommend that you keep a separate bank account for your self-employed business. Some clients just use their personal bank account. The problem with doing that is that your personal costs will be all mixed up with your business income and costs. And that makes it much more difficult for you to keep control and to understand what's going on in your business. So that's why I always say, have a separate bank account for your self-employment. It doesn't necessarily have to be a formal business account. It can just be another current account. But just to keep it separate is the recommendation. And you'll see why a bit later. But definitely recommend that. And even if you've started the business already, you can still set up a new business bank account or a new current account just for the business. So we're going to have a look at some tools to help you with your accounts. We do have some information which I think they're going to hand out, which gives you a bit more information on the costs. And in fact, we have got another course, which I think will be the next course, that will go into more detail about what costs you can deduct from your business. So we'll look at that briefly at the end of this course, and then perhaps in another course in more detail. So I mentioned about separate bank accounts, and there are a number of banks that will offer a free business bank account. So it is worth looking around, because some of the bigger banks will charge you a fee for a formal business account. But if you look around, there are some banks that will offer this free. One of the ones I've been recommending to my clients is one called Metal, which is run by NatWest, and that's currently free for businesses. So it's definitely worth having a look at that one. But if you do an online search, you can generally find these accounts. And then when you have your bank account, the next thing to look at is, if you're not going to use a spreadsheet or a manual system, I would recommend using an online system, because they're very good and they allow you to keep really good records. And there's a number of free online systems. Some of them are free to everybody for basic users, and some are free with a bank account. So for example, the one I mentioned, Metal, you get free use of an online system called Free Agent, and we can provide you with some more information on that if you need that. So once you have your online system set up, you can use that to send out invoices, keep track of who's paid you, record your costs, and reconcile your bank account. And doing all of that will provide you the figures that you need for your tax return at the end of the year. So it allows you to keep the records as you go along. Some other points that I want to cover. Very important to be organized when you're self-employed. So set up the bank account, as I've mentioned, and keep the system, the online system, or your manual system up to date. If you can't be organized, perhaps consider using a bookkeeper or an accountant to help you, but you would have to obviously pay for that. If your business grows and your profits are high, you should take some advice from an accountant, because it may be better from a tax point of view to run as a limited company. But that is a bit more complicated and you'd probably need some support. So we're not covering that today. For support on self-employment, there's a lot of help online. And if you do get stuck and you don't have an accountant, Citizens Advice will also help you with the tax return. So it's worth speaking to them if you get stuck. But as I said, there's a lot of help online from the HMRC website, and you can also call them for advice and help. And again, if you have problems, if English is not your first language, you can have somebody with you when you call them, and they will speak to that person if you just provide authority for them to speak on your behalf. Okay, so I'm going to cover now. This slide is, we're just now going to move on to how income tax works and personal tax works. So it's quite unusual in the UK from all other countries, because our personal tax year runs, and it's a historical thing, but it runs from the 6th of April every year to the 5th of April in the following year, which is a strange day in the middle of the month. But so because of that, you can just run it up to the 31st of March. But it's very different to all the other countries, because most countries will run everything to December. So everything runs up to 31st of March or 5th of April. So in any tax year, if you are getting self-employed income in that year, then you need to report in the year up to 5th of April. So if, for example, today was your first day in business, so we're 23rd of January, then the first year you'd be reporting to is 5th of April 2023. And you have 9 months. We have until the following 31st of January to file that tax return. So if you started today in self-employment, your first tax return would be to the 5th of April 2023, and the due date for filing that would be 31st of January 2024. So that's the timescales that we're talking about. Some people ask me that, when do I need to register? You only need to register if your trading income, and we're talking about income, not profit, is above £1,000 in a tax year. If it's below that amount, you can ignore it. And this is to avoid people having to do a tax return when they have very small earnings. This is called the trading allowance. And this applies even if you have other income from employment. So if you have a job, which is your main job, and that's taxed, by the employer, and you just have a very small self-employed business where you're only earning under £1,000, then you are not required to register. All I would say is just keep a record of how much you've earned, so you know if you go over that 1,000. Okay, we're going to do a quick overview of income tax. Now, this is perhaps a bit complex, but we put it in just so you've got an overview of where the thresholds come in the UK. So income tax is payable on earnings over the personal allowance, which is currently £12,570. If you have more than one source of income, so if you are employed and self-employed, they get added together to work out your income tax due. And the tax rate is 20% over that amount until you go up to the next threshold, which is 50,270, and then it goes up to 40%. And then in the higher end of earnings over £100,000, you don't get the personal allowance anymore. and over 150,000, you pay 45% tax. Okay, so that's income tax. And then the other thing that you have to pay is national insurance. So by paying national insurance, that gives you credits to state benefits and state pension. So it's very important that you are paying some kind of national insurance to get those credits, so that if you then become unemployed or need to claim any benefits, then you've got credits for that. Now, there's a number of different types of national insurance, and I've just listed them out there. Again, it's probably a bit complex, but we have class 1, and that's paid when you're employed. We have class 2, and that is the one that you would be paying when you're self-employed. It's mandatory if you earn, and this was for last year, but if you earn over £6,725 per annum, and it was £3.15 a week, but you pay it at the end of the year with your tax return. You can also pay it voluntarily if you earn less than that. And I always recommend to clients that they do pay it voluntarily if they're doing a tax return, if their earnings for 1 year are below, so that they get their credit towards their state pension. Class 3 is a voluntary way of paying, but it costs more than class 2. So if you have the option to pay class 2, that's a cheaper option. And class 4 is a strange type of national insurance, which is also paid by self-employed people. And it doesn't actually give you any credits, but it's really an extra tax. And that is paid by self-employed people on profits over 9,880. And the rates there are slightly out of date because they've changed again this year with the budget, but they are. I mean, class 4 national insurance is the reason why when your profits are higher, it's better to do, it's more tax efficient to go as a limited company. So I always think of class 4 as a tax rather than national insurance, even though it is technically national insurance. Okay, so we're going to move on now to, do I need to register? So when do I need to register? If you have a tax or national insurance liability, then you need to register, and you need to register in that tax year. So I've said this will apply to anyone who's employed, earning at least 12,570 and then earning over 1,000 from self-employment. If you're only self-employed, you technically only need to register once you hit that lower, that class 2 threshold, so over 6,725. And if you're unsure, you can wait and register at the end of the tax year. Do it as soon as possible after the 5th of April so that you get your registration number and can file the return in time. You may want to register even if you are below the limit to get your credits towards the state pension and benefits. Okay, so how do I register? So the most efficient way to do it is to do it online, and you go online and set up a personal tax account. And I think these links will be here on the YouTube channel so that you can follow them. You register online. Once you've got the personal tax account set up, you can then register online for self-employment, and you will receive what we call a UTR, Unique Tax Reference Number. It's a 10-digit number. This is separate to your national insurance number, and it's specifically for self-assessment and for the return. And once you have a UTR, then you will keep that number forever. I have had some clients have problems getting this personal tax account set up, and that is if they can't pass the ID check. And if you don't have a UK passport, then sometimes it is difficult to pass the ID check. So if you cannot pass the ID check, it's also possible to do the registration using a postal form, which you can complete and print off and post. And there's a link to that postal form there. Okay. So we're going to go on now to completing a tax return. So if you are going to do this yourself and you've been able to set your personal tax account up, then you complete the tax return online on the personal tax account. If you cannot set up a personal tax account, what you can do is set up what's called a business government gateway account. And once you have your UTR in the post, you can then use that to set up your self-assessment record and complete the tax return online. For each tax year to the 5th of April, I've covered this before, you must file the return online by 31st of January the following year. It is possible to do a paper return, but if you do that, you have to do it by the October, so you have much less time, and I would recommend doing it online if you possibly can. So once you've gone online, you enter all sources of your income, including your employed income and any tax deducted. So you might have to complete more than one section if you've got more than one source of income. In the self-employed section, provided your turnover is below 85,000, then you're actually only going to enter two figures, one for the total income and one for the total allowable costs. So it's not as complex as you may think. Okay. So just talking a bit more then about what those costs could be, and we're doing a very brief overview of this. So as a self-employed person, you can generally include business costs that relate wholly and exclusively to the business and to the trade. So people often ask me, can I claim this? Can I claim that? And it's, yeah, I mean, as a general overarching rule is if you've bought something, for example, if you buy a computer for your business, then yes, you can claim that. There are some things that will have dual use, like things like a mobile phone, and yes, you can claim for the percentage of the mobile phone that's used for business, and that's often done just on a reasonableness basis. So it might be that the phone is 100% for business, or it might be that you say it's 50% or 80% for business, depending on your usage. A couple of the other costs that people generally ask me about, so I've just put them in here, is one is travel. Can I claim for my car, for my petrol? It's quite complicated if you start to do that. So I generally recommend that you keep a record of your business miles if you travel by car, and you can then claim those miles at 45 pence per mile for the first 10,000 miles that you travel, and then 25 pence. And that's much simpler than trying to claim a percentage of the cost of the car, and it gets quite complicated. Unless you have a van that's dedicated for the business. In that case, it would be worth claiming the actual costs. But as I said, all this is, I think we'll probably cover this in a bit more detail in another course, because it's getting quite specific, but that's quite a useful thing just to know, the 45 pence per mile for the mileage. Another question that's often asked is subsistence or food. Can I claim for food? Because how can that be a business cost? And generally, it's not a business cost, but if you have to travel away from where you normally are for work, then you can claim for food, and that's called subsistence. So if you have, for example, travel to a meeting to meet a client and you have to have a lunch away, then you can claim for that lunch. And that's something that employees can't do, so you can only do that when you're self-employed. And I've said read the guide for more details. So that's, I mean, it's quite a big area, so we can have to cover that in a bit more detail in another course. And that's really